teams, but we want to make sure we shouldn't just be watching NQ in the market. We need to be watching YM as well, ES, and then of course Dixie. Dixie is the value of the dollar. A lot of the time when Dixie's going up, the NQ will go down, and when Dixie goes down, MQ is going to go up. So we definitely want to be able to swap back and forth on those things to be able to trade NQ the best. So of course, doing it on your phone, I can understand it's more difficult. But if you have some screens in front of you, definitely try to monitor those. Monitor the highs and the lows. It'll help you find SMT. When ES and YM have taken a high and NQ hasn't, we want to be able to see that because that's important when vice versa, stuff like that. So we definitely want to make sure we're watching those areas. We're really pushing up into all-time highs now. I don't know why the market hasn't really made some correction to the downside. I'm sure Riz is wondering the same thing because we've talked about it. I think really just news is pushing it right now. Just so I don't know when it's going to happen. What there needs to be some correction to the downside in the market. I'm really just waiting for the day it happens. I don't trade all-time highs. I don't like to trade the market when it goes to all-time highs and it's just pushing up. Of course, you can use standard deviation to trade that, but you really don't know how far the market's going to go because there's really not much liquidity. But of course, you got standard deviation, so it's going to move into those lines and reject them and stuff like that. But that's just not my thing. I like to know exactly where the market's going to go, and I like to be able to place my trades accordingly. So lately I've only been trading the market going down this past week. So that's just been my forte on it all. Uh, Friday we broke more all-time highs as usual, and we just kept pushing up. Um, so yeah, that's really it. Um, Let me pull something real quick. Now I see, Diane, you figured something out yesterday, and it looked like you had a good day. I'm happy for you. Um, yeah, Dixie is the dollar index. You're starting to like pre-market trading more. Pre-market, you can have some pretty nice moves because we have that retracement usually before the main move at market open. So it's a good thing to watch. Um, I am gonna teach you guys something new today. Um, let's see. Let me pull this up. It's a better way to form a bias. I was talking about it with Mike yesterday. Um, it's just something I've discovered lately that typically happens. It's a pattern. And now it's not 100% accurate, but it is a way to develop a better bias that I've been able to determine lately, that I've been watching. Let me pull up my notes. Okay, there's one. Okay, here's two examples. Perfect. That made my life easy. What is this? September 4th? I'm just going to change screens since I've already pulled it up on a different chart. Now, this is, if y'all have questions, please come to me about it because you can confuse yourself a little bit. So, um, please come talk to me. It's something that I was sitting with Mike talking about yesterday, wondering if I should even share this just because you can develop the wrong bias if you're not reading it clearly. Um, and I want to make sure that that happens for you guys, that y'all don't run into that possible situation. Oh, Lordy, that's a big screen. So here's one day. I'm gonna draw a line there. Yeah, there we go. Okay, wait, I need to put a line there, otherwise I'm gonna lose it. So
Hey, League,
here's two examples.
I wonder if we're
Well,
watching your same screen because we see, are you looking at the NQ on the 15-minute? Because I know you said you drew a line, but I don't. I
thank
want
you
to make
for that.
sure.
Wicked Wicks killed my accounts. Prop firm accounts or what, Riz?
Uh-oh.
And signs that help you
There
stand
you go.
out. And must-have merch
That
like
should
tote
fix
bags,
it now.
t-shirts, and hoodies. Right now,
Okay,
customers
so
get
you
40% off with
have
code NEW20.
two
Because if
things.
you need it, we print it
And
at
me and Mike
vistaprint.com.
spent three. I didn't even
Have you
realize,
been
Mike, we
feeling
spent
sad most of the
over
time,
3 hours
losing interest in things you once cared about? You might
doing
be
this
experiencing
yesterday.
these and other symptoms that are difficult to
Me and
understand.
him
These
were
symptoms
going
are worth
through the
exploring with a
charts.
doctor. Learn
We
more
got
about major
ads.
depressive disorder and a potential treatment option at managingdepression.us.
How's that? Was it music playing in the background? Yeah, it's music playing right now. I don't even know what song that is. My bad, y'all. Um, Still learning streaming. I guess we got sponsored. Okay, seriously though, I need to post this and then y'all save it in your notes. You can write it down. Keep this in your pocket, back test it, practice it, learn it, because this is a better bias than just us opening up higher or lower at midnight. So let me go to this. I have to do it from my phone because the note's in my phone. Okay, it's in the chat now. I'm back. Let me pull up. I had to open it up on my phone, so it exited me out on here. But I'm back on here now. Okay, so here's an example on a Friday. So what it states is if we open at midnight and go higher at midnight, then we go lower at the London, specifically 3 to 4 p.m. or 3 to 4 a.m. Then we have a retracement back up before the open. Then we're going to dump on the New York session. And if we open and go lower at midnight, then we go higher during the London, again, specifically 3 to 4 a.m. Then we're going to have a retracement back down before market open, and then we're going to go up for the New York session. So if you look at this right here, we opened and we came up during midnight. During the No. So this is why I say that, because the green's right here. And like I said, it doesn't work every time. Oh, wait, I don't know if that was the right one that I pulled up. Oh, crap. That wasn't the example I wanted to use. We're gonna start with this one. Okay. If we open, we went lower at midnight. Then from 3 a.m. to 4 a.m., we went higher. And then pre-market, we had a retracement back down. And then we were bullish through the day. Now, of course, we did have this small candle, but this candle pushing down, but we went up through the day. And from like, even from here, that's 814 to the top, that's a $240 move. So that's a good way to develop a bias. You got that one, and back test it. You're gonna want to practice it, play around with it. Like I said, we sat on the charts for 3 hours yesterday just doing this. Me and Mike. Oh my gosh. And then here's another one. So at midnight we went up. During the London we came down. We had a retracement back up before market open, and then we dumped on the New York session. So this is just a really good thing that you guys should go and back test. And if you're wondering what the indicator is, it's the new day divider. So it's going to show you from midnight each time, and it's going to have the dates labeled too. That way you can, I mean, the dates don't matter as much as the time. But definitely this is something you should go back and look at and play around with, because it is a great example. It's a much better way to form a bias through the day. And even if you also have an alternative to develop a bias. So like I'll go to let's pick one. So we came, I want to find a clear example for y'all. So we took sell side. Oh, that's not what I want. Market opened, we came up, took buy side at midnight. Came down, we took some small liquidity of sell side. Clicked the wrong thing again. Took that liquidity. Market came back up, we took this buy side. We came down, we took this sell side. What did the market do next? It came up and took buy side. What's next? Sell side, dump. And it's on a 15-minute. 15 minutes going to be your best friend for developing a bias. That was something Mike even pointed out yesterday. He said it looks so much more clean when you're trying to form a bias in the market. But remember, it's always just buy side, sell side, buy side, sell side. So we take a high, we take a low, we take a high, we take a low. It's a great way to develop this, you know. Even with, you can go here. What did the market do? Came up, took buy side after midnight. We came down, we took some sell side, this liquidity through here. What happened from there? We came up, taking more buy side, and this was 8:30 a.m. And this is what Mike's talking about when he said he likes pre-market moves now, because you can have some pretty nice pre-market moves. But what happened? We took buy side. We took a major, I don't know if this is all-time highs, probably. No. But we did take this high right here, which was a major high before we had, I mean, of course, we ultimately had this high, which we take it a little bit higher up. But this was a major liquidity point, which is why we had this push down afterwards before going back up higher. We're always going to have a reaction. Whenever we take a high, you're going to have a reaction the opposite direction because it's just a collected liquidity and the market's going to go the other way. So we took that high that was to the left and now we came down and we wiped all the way to here. All of this through here that hadn't been taken yet. And I'm sure if I went, we can look at it right here. So the market didn't need to go down and take this at the time being because there's no inefficiencies through here other than the sell side, but there's no fair value gaps through there. Of course, there's some further down, I think. No, that one's been taken. That's been taken. Look at the 1 hour. Uh-oh, I think I just got lost. Yeah. So that's why the market didn't need to go any further at that point. So if we look right here on the 1 hour, all that's really left is this liquidity. That's the main thing. But this fair value gap was tapped into here, of course. This fair value gap was tapped into here. And then there's really no fair value gaps going below. This fair value gap was tapped into here. We have this fair value gap tapped into here. Oh shit, we got this one right here that wasn't touched. Totally missed that. But honestly, if you do this, yeah, that's why the market stopped there. There we go. Because for through here, all the inefficiencies have been touched and reached into. It's harder to just see them fully on a higher time frame. Sometimes you got to drop a little bit lower. But yeah, we took that major buy side, and so we slammed down, took and sell side. Does anyone have questions on that so far? You can do this. Came up, we took buy side. All this liquidity for here, so it's minor. Then we came down and we took all of this liquidity through here. Every single thing. What's next? Buy side. Market came up. Took more buy side. And then where is 9:30 a.m.? Right there. So there's a wick to the top and then a wick down. Whoa. So we took buy side, came down, failed to take more main sell side. So we took some minor through here, some internal liquidity. We came back up, we took more external buy side. Then we came down at open, right after open, and we wiped more. So next is buy side. Came down, took that high. Came down, took some external sell side, internal. And we just kept pushing through the rest of the day. Questions, comments, concerns? Definitely back test it. is not gonna. I'm saying it's not. No bias is always going to be 100%, you know. But the fact is, this had a really high win rate. Me and Mike, we did like probably what, Mike, 30 or 50 days. We did all of August. I know that for sure. But like only 3 or 4 didn't work, and that's what he said too. Um, and if you're mapping it out and you see that that bias isn't working for you that day, 'cause like I said, it's not going to work every time. Even that midnight open bias doesn't work every time. I prefer this one now. You can always, like I said, draw up your lines. The open is right here. Buy side, sell side. So what's next? Buy side. We're going to go higher. And the market did just that. You're lost. Well, so we're looking at a 15-minute time scale. It doesn't matter how big the percentage of the move is going to be. It's what I'm getting at is how to determine if we're going to have a bullish or bearish day. That's what I'm mainly looking at. That's how we develop the bias. The move isn't, there's not an expected move. But what you can do with this though is you can target higher time frame liquidity, do your micros, and you can take partials along the way instead of just scalping. Why are you lost, initial? And if you want, I know we're doing we're getting together after this to do our one-on-one. I can explain it more in depth with you if you want to. Wait till then, and then B, we need to get together.
Yeah, you'll explain later, no problem.
Okay. Yeah, just take note on what you're lost on. That way, you can explain to me when we talk. Everyone else, sorry I've been a little bit not not getting with you guys like we had talked about. Just it's hard. My schedule just always is moving around. Things are changing. I'm actually probably here about to open up a lot of free time and just go back to day trading only because this other stuff I'm dealing with just isn't worth my time anymore. So my availability will be much better for you guys. But what I'm getting at initial is like it's a way to develop your bias for the day. So like what I said here is we went higher at midnight. We went lower during the London. We had a retracement before market open, and then we went up through the day. So if we go higher at midnight, lower during the London, we have this retracement back down before the London, before the market opens at 9:30, then expect a bullish day. Now, your bias, you need to be willing to change your bias at times because sometimes things also change the market and how it works. So like, yeah. So like, look at the note I typed up top. And so like, if we open and go higher at midnight, so at midnight we went higher, then we went lower during the London. So we took buy side, then we took sell side during the London. We had a retracement back up. Wait. We had a retracement. We went up for a little bit, but we had that retracement pre-market right before the open, back down, taking some sell side. And then we had a bullish day. And then even for like here, because we didn't really, we kind of, but English. But I also said this bias will work for a large amount of the time. But in case you're trying to develop your bias for the day, and you're saying, and you see, hey, okay, well, Chris said if the market goes higher at midnight and we go lower during the London, then we'll go, no, I'm sorry. If we go lower at midnight and higher at the London, then we'll have a bullish day. But you look right here, it's midnight right here. We went up, right? And then we came down. So it's the complete opposite. It doesn't match up with either of those things that I typed out for you guys. So what you do in this situation is then you have to chart. Okay, well, look, we took buy side. We actually made equal highs, which is even better. We took buy side basically, but we didn't fully sweep it. After that, what did we do? We came down and we swept sell side, right? We swept all this liquidity that was sitting through here. So what's the next thing? Of course, buy side. So the market had made a retracement, and you can see right here at this candle, it took out these equal highs. And then we had a slight bit of sell side and a push up after that. But if you look at it, it's buy side, sell side, and then buy side through the day. So it's a way you can develop your bias if this one I'm showing, it's a backup if to develop what your thoughts are on the day if this original one that I just showed y'all to start with isn't working. Is any of this making sense? I want to make sure, because if there's something confusing about it, still, I want to make sure I go over it with you, because if it doesn't make sense, I don't want you to try to use it. I need you to try to practice it beforehand, because I don't want you to shoot yourself in the foot. It works, but you got to make sure you're using it correctly. And if it doesn't work correctly, then you need to map out buy side, sell side, figure out what we're doing. What we just swept, because you got plenty of time before market opens. The market opened right here, and you can see, okay, well, this day isn't matching up with what Chris showed us. So what should we do? Okay, let's draw it out. We took buy side here at night, left equal highs though. But then we came down during the London and we took sell side. So if we took buy side at night, well, did we take it? What's the high here? 450. Oh, we took it by 25 cents. So that's a good thing. So we swept it by 25 cents. Well, that makes me more comfortable in this situation. Yeah, we got a tiny little bit above it. So we took buy side, we came down, we took sell side. And then what's next? Buy side again. And sorry if I'm being repetitive, but I want to get that in y'all's head, because it's really important. Otherwise, if you look at this incorrectly and make your analysis incorrectly, you're gonna set yourself up to take a loss right off the bat. June month. If you'll let me do June, I will. But this wasn't my main focus of today. I just wanted to kind of go over that. Yeah, Cheyenne, if you wanna try to message me and do a one-on-one with me, we can back test together. I don't have a problem with that. I want to make sure that we get adamant time discussing anything that y'all are still working on, still trying to figure out. Is there anything that you guys have? Anyone? This is y'all's time. I'm here to answer y'all's questions and help clear up any confusion or anything y'all don't understand. So it's always good. I'm here to do whatever. Well, I struggled with this 2 weeks. I didn't really have any struggle. I just didn't like the price action, so I traded less. I'm not gonna trade anything that I don't like. I'd rather make 1 or 2 trades. Um, I don't care to trade every day when we don't have something beautiful or clear. Um, the main days I traded were FOMC. I waited until 2 p.m. Um, that was literally like the main trade I took this week. I targeted the 2 targets that I told my friend about. How do you identify order block when it is forming? And then you mentioned that you took an entry on the basis of a 5-second chart. So, I mean, really the thing is with order blocks, okay, look, so we have one right here. So we have a green candle followed by 3 black candles. That's an order block right here in this situation. You can even use this one because there's 2 following it. You don't got to use all the candles. But we'll just use this one for example. So that order block formed. What I'm going to do, I'm not going to really pay attention to it yet. More so my attention right now in this situation is on how the market responds to this fair value gap that's right there. Okay, so it came down, it bounced off this fair value gap. So now it's bouncing off the fair value gap. Okay, so let's look to the upside. Let's see what's up here. Okay, here's this order block that's here. Let's see how it responds now to this order block, right? And then that's how I would look for an opportunity for an entrance. So I'm not even worried about this until I see the market starting to head towards it. And when the market's heading towards something, that's when I'm gonna draw things out and look at it because look how it responded. It stayed under 50%. And then look, once again, it came back up and tapped into it. And then we kept pushing to the downside. So it's not even on my radar until I see the market moving in a direction towards it. So like we see this move to the upside right here, right? Okay, well, what happened next? The market came back down. Okay, well, what's down here in this area that could stop the market from continuing further? You got this bullish order block right here. So I'm not paying attention to it until I see the market heading towards an area. And then I want to see how the market responds to it. I want to see how it reacts, you know? Is it going to close into it? Is it going to close 50% of it? It's going to wick on it. Is it going to do this, which is a beautiful sign right here. Beautiful sign to get in a trade. And even if you didn't get in a trade, you got this fair value gap right here. But I mean, I wouldn't be as much of a fan to use that fair value gap just due to the fact that it really came far down into it and almost practically closed it. My main focus at this point would be this wick that's right here. Look at that. It came down, touched off 50% of the wick. And actually, I think I need to fix it. Yeah, it touched off 50% of the wick and used that to push up to the upside. But I mean, not even just that though. You do have this order block that's right here because there's 1, 2, 3, 4 green candles that follow that. And so even if you didn't just use that wick, you now have another order block right here that it tapped into. So what I'm paying attention to is when the market gets into an area of interest, I'm looking around to see why it's responding that way, and then I'm drawing my stuff out, seeing how it reacts to it. And based off its reaction, well, okay, the market's showing me that we're pushing back up. Okay, the market's showing me we're pushing further down. And order blocks are really, so closing above 50% or entry with a small stop loss at 50. I want to see the market stay outside of it. Like If that candle comes into it, like, here, let me redraw it. That candle came into it, tapped off of it, closed outside of it. This next candle formed. What did we do? We came in, we tapped off of it again, immediately reacted back up, and we pushed to the upside. That's an entrance for a buy. And then that'd be from what? 738 to 817. That's a $70 move. You know? That'd been a beautiful move, and I'm pretty sure we're at all time. No, that's when we swept. Oops. We swept this high right here. So your target could be this high. Could even just be this high. You have 3 targets right here. Partial, partial, full take profit. And so what if you don't hit all 3 of them? What you do is you move your stop loss into the green and you trail it each time as it moves higher. So if you get stopped down in green, so you didn't win the trade completely, that's fine. You still took partials and still made your money. But I'm not really paying attention to things. Would it be on the 5-second chart or something? Would what be? You should not be trading on the 5-second yet, brother. A 5-second will fuck up your day. And excuse my language, but if you're still working on holding through 1-minute candles, trying to find trust, and sitting on your hands through a 1-minute time frame, 5-second will not be a fun day for you. It will make you crap a brick. Like if we were to look at this, yeah, it can help you catch reversals, of course, but you will at times see stuff like this. This came up, shot up to 818 when it opened at 810. So it's an $8 move, so it's not crazy, of course, but it's still that'd make you freak out right there. This wick that the market's going to push further back down now, only for it to go back up. You would hop in here, see this wick up, and it did shortly after, but it's a lot of wild movement. You'd see this candle explode, create a volume imbalance, push up high, come back down, then the market's going to move down over the next 15 seconds, 20 seconds. You're going to panic that the market's reversing, and then you're going to sell, only for what if your target was right here? And now you got out your target. You got out of the trade. You got it wicks like crazy. This one right here, look at that. You have pretty rapid movement that moves fast. This one?
No, the one that we went long. Remember the one with like one red candle?
Oh,
Yeah, the long trade.
yeah, I got you.
Because
It's
what
just I'm
happened
not
is,
crazy about trading.
yeah, but like, see, I'm asking because of lower time frame, because what's happening is there is like one red candle tapping into this order block, right? And next green candle
Yeah.
basically shoots up. So if we stick into 1 minute, there is basically like no entry. We have to, like look for break of structure maybe on 5 seconds on like whatever helps us to, just like get into this trade earlier than 1 minute later.
I can understand that, but
if we're
like,
trying to pinpoint and anticipate this move, right?
yeah, no, I understand that. I'm just saying though, the 5-second can mess with your head. It can make you get out of trades. Like you see all this crap right here, right? You see
Yeah.
all this
Only like
movement.
at the entry point, and there is definitely no reason to stay
Yeah,
on 5 second, like for sure. Because like on 1 minute, see, it's impossible to catch.
you'd have 2 minutes to catch that. Well, not a full 2 minutes, You have, so here's here's 3 opportunities you have, right? So you have this candle tap into here. You can draw up a fib. If this green candle closes through that wick, there's a high probability that where the market's going to go higher. Okay, cool. So then you could enter immediately after this candle close. You could enter here off the tap, stop loss above. You could enter here when it pushes in and then immediately rejects it back up to the upside. Enter here, stop loss below. You could enter right here on this candle after it closes through this wick, stop loss goes below. You can wait for also it to come back and tap into this order block right here. Boom, you can set your stop loss at 50%. There's a lot of chances you can take in this situation to still catch a trade. Yeah, I can do that. Um, Gold's also really fun to trade too, and you can make a lot of money. I know I say this and I'm showing you guys all these examples with ease, and it's just because I'm used to it and I've been at this for a while. So it's different for me. But I want y'all to see there's multiple chances you can take. And that's why it's good to learn how to use fibs. That's why it's good to learn to pay attention to wicks. Wicks are really helpful in being able to find entrances in the market. Because if you want to see if we're going to go further down or not, you could draw a wick on this candle and you could draw a wick on this candle. And if the market closes through this wick right here, we're going to go further down. If it comes back up and closes through this one, there's a high probability we're going the opposite direction. So it's just there's multiple opportunities to learn stuff and to use different things for trades. So I love using wicks for trades. Like that's my favorite entrance because you can catch a reversal. Like if you watch the market, and this was a trade I took the trade yesterday with Mike, and we ended off on what 30 grand on that one contract in a trade. I used it like on a wick like this, and I entered because the market stayed above 50%. And then we just rode it all the way up. No, that trade was 8 grand. And then we took a reversal at the top of a trade, and it wasn't this one right here. It was just a different day. But we took the reversal at the top of another day, and that's the one that got 30K. Like you can look at this one right here. You can see the market came back down, tried to push back up, tapped off 25%. And what can you do in this situation? You can enter a trade. What is going on with that? There we go. Why does it say 0? That's interesting. You could enter a trade at 24,814, so the 50% mark. 812, I mean, at the 25%. .50. Put it there. $125 risk. Set it right outside. And you could target previous low, 1400. That's a 1 to 14 ratio, risk reward. That's why wicks can be helpful to catch tops and bottoms. And then, I mean, like, even if you did it with this one that I did a second ago, the best part about this too is look how it got weaker. It kept trying to push. We had this push down, draw the wick out, wait for it to show you what on the next candle what it wants to do. It pushed down, stayed above 50%, stayed above 25%. This push got weaker. Notice how the wicks are getting smaller. That's a very high probability the market's about to reverse. Now, if it pushed down and then it wicked harder into it and wicked harder into it and started to close further and further into it, then there's a likely chance that will continue on. So you could enter. I mean, you could enter right here maybe at the 25%. Stop loss goes below. You target this high. That's a $180 to $2,000 reward. You know? That's why wicks are really cool. And if you just wanted to be safe too, you could either draw the wick on the other side. Look how the market closed over 50%, closed through 100%, came back and tapped off of the first line, and then we had to push to the upside. There's another opportunity there. But then you also got an inversion too right here. And look how the wicks kept getting weaker. You had a wick here, a weaker wick, a weaker, and then we pushed to the upside. And then on top of that, you got another inversion right there. The market's literally opened right at it and then pushed up. So there's a lot of opportunities to catch reversals. It just takes time and takes training your eye to look at these things. It's not me that it took me I've been at this for 5 years now, almost every day. I lost a lot in the beginning. I've lost probably well over $250,000 through the years. But in the beginning, I think first year I lost like 75 grand. But it just took me back testing and training my eyes to repetitively see these things. Ironically, 11:30 is precisely when I stopped trading. I was eyeing this candle yesterday though. Was this yesterday? Yeah, that was yesterday. And you would have caught all the way up to the top, my man. That'd have been crazy if you caught that whole entire move. This is the crap I don't like to see. That's usually why I'm done by 11. Yeah, lunchtime sucks. Nothing happens. I mean, you really had nothing happen the rest of the day. Because if you look at it, we took some buy side, we took sell side, and then the market just slowly pushed up the rest of the day. Usually once you take buy side and sell side, you don't really have too much of a response from there. But we did. But for the most part, typically once you take buy side and sell side in the session, then you're not, and major buy side or sell side, not minor, then you're not really going to have too much movement the rest of the day. And unless you want to force a trade, it's always best just to get off at that point. Dang, one tick. That would have been fun. And does that make sense for you? Or do you want me to run through another example? How come? Crimson, B, Riz. Do y'all have anything that y'all are trying to figure out still. Bruh. B, what about you?
I mean, yeah, I shall agree as well. But it's more so of just being able to do it in real time. So it's just a journey. But no, as
It's the
always,
hardest thing.
yeah, it is. It is. But
And we
thank you
can
so
sit
much
here
for
and
showing us that though. I'm excited to practice and back test what you just showed us. So yeah, thank you.
like I said, the day thing is called New Day Divider. So
Yeah, I wrote
definitely
it.
add that. Okay.
Okay. Thank
And check it out. And then like I said, if there's a day that you're back testing and you don't see it really working too much, then start drawing out buy side and sell side, And
Yeah.
that's another way you can see what's going on. And do it on the 15. I chart all my liquidity on the 15-minute.
Okay. Do you ever look at anything on the higher time frame, or 15 is the highest that you pretty much go?
Well, so of course on different days, I posted this kind of further up in my channel, my lessons page. Let me pull it up. There's different things that happen on different days, typically. With what we're dealing with right now with the market is not to an exact at the current moment. So it's kind of annoying me. Before we got to these all-time highs and before we started having all this crap go on in the world,
Yeah.
this worked amazingly well. Um, up until probably like May or June did it start being not as accurate. So I'm just waiting for things to kind of level out. Um, but Monday, you're usually going to take out Friday's high or low. Tuesday, you're usually going to create the high of the week or the low of the week. And and then Wednesday comes. So let's say you make the high of the week on Tuesday, you're typically going to make the low of the week on Wednesday, or vice versa. If Tuesday makes the low, Wednesday should make the high. Thursday is always a consolidation day for the most part. Lately, we've had some interesting movement on Thursdays, but it's still a bunch of crap movement still at the same time. Like, I wonder if we have. Like, well, this was a crazy move when we had FOMC.
Mm-hmm.
Yeah, I told my buddy I thought that it was gonna go to the first number, which was buy side, then we would take sell side, but it took sell side, then buy side. Um, the main reason I didn't share that trade, those two numbers, was those were huge numbers in the market, and I didn't want you guys to get caught up on FOMC trading because it's really dangerous. A lot of these candles can be $40, $60 candles that can stomp you out in a heartbeat and blow an account. Like this is 668 to 643, so it's like a $20-ish candle.
Mm.
You got this one, 655 to 689. It's a $30 candle. It's just huge, huge swings around. Like you had was this FOMC? I don't think that was FOMC. This was FOMC. There we go. Yeah, I'm pretty sure this was. Let's see, what was it at 2? Yep, this was at 2 o'clock. So just big candles. I don't want to put people in that situation,
Yeah.
especially when y'all are trying to still learn this this whole strategy, and still trying to trust yourself, though. But yeah, so if you scroll up to 1-29 in the lessons page, I have that written down. I don't know if you have it written. But then Friday, you're usually going to take buy side or sell side, and then you're going to return back to 20% of the weekly range. So the weekly range, of course, is the highest high and the highest low of the week, or the lowest low of the week. So you're usually going to take buy side or sell side and return back to 20%.
Okay. Thank
Let
you.
me open. Yeah. Really though, I'm online starting at 2 a.m. There are some entry points off higher time frame fairly. That's yeah. He said after that last message, I'm having doubts. No, Riz is really good at trading. I've seen a lot of. He knows what he's talking about and doing in the market. He's a really brilliant person. I think he doesn't trust. And I'm gonna be honest, I don't think you trust yourself enough, Riz, or give yourself enough credit. A lot of the stuff you
Yeah,
talk about
thank you
lines
very
up
much.
with my thoughts.
Yeah, thanks a lot.
No, he's
Actually,
an amazing trader.
actually, those accounts blown up. It was my mistake, and I didn't realize there will be data release at 2 p.m. So I thought
Oh,
it's 7:30, which is UK time, 2:30. So I wasn't having even a stop losses. I thought it's gonna start 2:30. So those VIX came down and just it was brutal. It was my mistake. I openly say. So it was nothing
no,
to do
it
with
happens.
yeah. It was I
Eh,
basically caught off completely off guard. So it was my
Yeah.
mistake. So yeah, I mean, I don't need to hide. Why I need to lie? The more honest you are with your trading is better.
hmm
Yeah. But anyway,
I'm trying to
thanks for your
find.
kind words.
Nah, dude, you're a great trader. You really are. A lot of stuff you talk about all the time, it lines up with my own thoughts, and so like that's why you and me are always on the same page. This is what screwed me over the other day, and I'll show y'all this was a mistake I made. So I was so pissed about this too. So I left what happened? So I entered this trade going up, um, with my target here, and I set a limit sell. Once it got above here, I set a limit sell as my stop loss below it. Um, and when you set a limit order, it doesn't close out when your trade closes out. So it's set there. Um, oh wait, was it this one? Anyways, I left the limit trade order open and it didn't close out after my trade closed out. And so I had gotten off my phone, not paying attention to the limit order. And yeah, when I opened my phone again, I was in a trade and I was down like $3,000. And that was a real account. I was pissed. I made it back, which I was happy about. But yeah, I was like, really? I was pretty pissed about it. So make sure you cancel your limit orders if you're using those. Just a forewarning for you guys. It's not a fun situation to be in when it's real money and it's not prop firm money. It's a crappy situation. I mean, even with prop firm money, you should treat it as real money still. Even though the investment isn't as much. Um, but yeah, I was not a happy camper when that happened. I was it happens though. We make simple mistakes. We're human. I've entered trades before thinking that I typed one unit. No, I entered trades before on thinking I was on MNQ, typing in 10 contracts and realizing that I was on NQ and I bought 10 contracts. That's not a fun. That's also a wild situation to be in. Just keep it up, I mean, this is a process. Um, don't rush your payouts. Just take your time, build the account. And in time, you will get exactly where you want to be. Like I've seen the initials. I don't know if he started his challenge yet or not, but dude's been just taking it slow, and it's slowly working for him now. But just patience. And I had to tell this to one of my friends. He's in this channel. I'm not gonna call him out, even though he's not here. Um, but his biggest problem was not walking away, and then rushing his payouts. He would do great when it came to the valuations. He would take good trades, and everything would be perfect, and then when it came to the the funded accounts, it was he just would blow his accounts. And then he got into his mindset of, okay, well now I need to make that money back. So he started buying multiple accounts, passing those evals, and then blowing those accounts, and then he kept repeating that cycle. You're gonna have that aha moment, and everyone does. Everyone has that aha moment where everything clicks, and then you make more money in a month than than your losses than your total losses you've ever had. It happens just like that, and that's something I can promise you on. Um, just like don't get disheartened just because a trade. If a trade doesn't play out, journal the trade, journal your entrance, and then look back through the market and find why the market had to go for question it. Question yourself. Question why you got in there. Write down why you got in there. Write down why it didn't play out. Okay, well, it looks like they need to go for this fair value gap first. Well, that was probably an inefficiency in the market that it was originally reaching for. And then once it reached for that, then it could go in the direction that you were wanting to target, you know? Sometimes I've entered trades before where I thought the market was moving into that area, but then it reversed on me and it came a little further back down to tap into a 15-minute fair value gap. That was an inefficiency still that hadn't been touched. And then it went to my target. It wanted that inefficiency. It does that with volume imbalances too. In volume imbalances, I've seen the market go up for a volume imbalance just for it afterwards for it to just plummet back down. And I'm talking like big moves too, where it just wanted that volume imbalance, and then it was like, okay, now we can go down. Like it's just question everything you do, question all the trades you take, and I highly suggest you watch ICT 2022. That will open your eyes much more to how the market moves and why it moves. Like here you go. Here's a great example. Volume imbalance right here. What did the market do? It made its move down, came back, tapped into it, and then it continued further down. Stuff like that, you know? That's funny that I saw that immediately. Or like this one. Here's another one. Wait, where was it? I just saw it. How did I just lose it? This works too, though. The market came back down. It closed through it going up. Market came back down, tapped in through it, went through it, and then it went higher finally. And I mean, that's not a crazy move back down. 735 to 713. That's still what? A $500 move right there on one mini, and then it finally wanted to go back up. You can enter. Say you entered this trade right here because you were like, okay, cool. You drew out this order block. Oh, no. You drew out this one. You entered the trade. It goes up, so you set your target now. You set your stop loss to break even because it's up here. And then the market comes back down only for it to continue on to your target. Why did it do that? Okay, the market seemed like it wanted this volume imbalance first. That's why the trade didn't play out. when you have volume imbalances, it needs to go through the volume imbalance going up and going down and fully close through it before it's considered like good. Before like it's not, you could take it off your chart. It can still be used. The market can still use it to play to the upside or to the downside. It'll still use it. But it's you can take it off you can leave it on your chart. It won't be as big of a focus really at that point. And typically when you have a volume imbalance too, you're going to see a lot of weird movement around that area. Or it's a lot of back and forth. Like here's an example. So like if you look at this right here, the market came up into this volume bounce, closed through it up, closed through it down. What happened here? It didn't do it. It didn't mess with it anymore. Yeah, it used it to push down, but now what did the market do from there? It went all through this one, and then we went down. You got this volume imbalance. Played around with it. Not only did it play around there, played around with this one too, right there. It's literally a market. I mean, a magnet for the market. I've taken trades just targeting volume imbalances. I'm pretty sure I drew this one, but you got one where the market came back up, tap into that. It also tapped into the this proportion block here too, but it wicked into there, into here, and then we went down. Look at this. This one's a beautiful one. This tiny little volume imbalance. Tiny. Look how the market tapped into it. And then we pushed higher. We made this entire move up. I want to come back down, tap into that before we had to push to the upside. When I see volume imbalances and I'm targeting something, I'm going to set a partial, and it didn't even go for these two, so it probably will eventually. Everything's got to get covered at some point. But that thing came all the way back down. It made 763 to 600, $170 move, tap into that fair value gap, and then pushed higher. Made a $200 move. It looks like, yeah. It's just wild to me. It's just I find it cool. Because and when I see things happen, I question it. You want to question it. It's good to question it. Because the more you question what happens, the more you're going to start understanding things, the more you're going to start seeing things more clearly. Like the better it's going to work out for you when you begin trading, because you're going to see things on a different level. But that's probably the main reason I don't like trading at night, is because you will have well,
When they explain it, it seems really easy, but when
you have volume imbalances everywhere. And it's just annoying to deal with. It's just not my forte. So I try not to touch the night market. Some people like doing it. It's not really my thing anymore. I used to like to trade the night market because I wanted to catch every opportunity, but I didn't. I stopped doing that. I started setting more rules for myself. You got this one right here, where it came back down, tapped into it, and then went higher. And don't even sweat talking about you can't wait to see 3K in a real trading account. You're going to see 3K, then 5K, then 10K, then 15, then 25, then 50, then 75, then 100. And then you're paying taxes that are out the wazoo because you made so much money and Uncle Sam thinks he owns some of it. And like, I don't remember you sitting next to me, Uncle Sam, and helping me take trades. All I remember from you is getting a bill from the IRS at the end of every year. But seriously, journal everything you guys do. Journal every trade. That's why I created that channel. It's good for you to post in that channel if y'all will. Post the good trades, post the bad trades, and then y'all get involved and help and point out stuff that you see that could have gone better, or like it's all productive criticism. It's not negative criticism. No one here is going to judge you guys. We're all here to learn and grow and become better traders. It's the one you guys that show up, put in the work, continue to push yourselves, are there every day. It will take you so far. You have to become obsessed with this for a period of time for you to become good at it. It's like any other job. It takes time and dedication. Doctors don't go, heart surgeons don't go to school for a year just to become a heart surgeon. No, they have to go for 10 years. It's something that it takes time and energy and effort and is is a very high paying job and is a great way to live your life, you know. Think about being on vacation and you want to make $500 because you have kids and you want to take them out to rent a boat on the ocean for a day or go deep sea fishing, and you can just hop on your phone, take one quick trade, make $500. And what are you able to do the next day? You can rent the boat out if it hits your account. Like that's a cool feeling to have. I haven't experienced it yet, of course. That's something I envision one day, you know? But to get to that point, it takes a lot of effort, time, and energy, and you're gonna have some bad days, you're gonna have some good days. But you're gonna have those consistent streaks, those losing streaks. But just like keep working at it. I didn't pick this up quickly. I've been through everything you guys are going through. Emma has seen me want to give up constantly again and again and again because she's been with it on this journey with me. I know how y'all feel on those days. I remember the days where I lost $300, $900, $1,200. Even just $20 to $50 bothered me. Like, because even just with that loss, it's like, am I ever going to be a good trader? Like, why am I doing this? What am I doing? Am I wasting my time? No one believes in me. Everyone's saying I'm never going to get anywhere. I'm just wasting and gambling my money. No one understands me. You're going to doubt yourself and you're going to not believe in yourself. I've done it so many times. That's honestly I'm teaching Emma to trade now. That's not her biggest concern is her going through what she watched me go through as a trader. And I typed that message up in my motivation page, and Riz said was directed. He felt like it was directed to him because it's like exactly. It's like I was talking to him because that's how he feels. But you know, if you just continue down this road and not expect it to be a quick overnight success story and accept the fact that it's going to take some time. Have high standards. Please have high standards on yourself. I'll get to your message in a second, Riz. It's a beautiful thing to have high standards. You should have high standards. There's nothing wrong with that. But you ain't been around in this game long enough. So don't lose heart over it. Don't sell yourself short. Have those goals. Let those goals manifest in your life. Use them to empower yourself to keep going. Like, but you got to remember, you cut yourself some slack. You're learning something that you haven't been doing. This is y'all. Most of y'all are just a few months into this, or even a few weeks. Like, you should be proud of where you're at, because you're gonna look back at it one day and really see how far you've gotten. And this will be a joke of the past, and you're gonna be maybe helping someone else now learn how to trade. And it's a fun thing. But what I tell people is I have friends who want to grow their account 10 fucking percent in a day. Like, that's great. That's cool. But you grow your account 10% in one day, like you're going to have a higher probability of losing it. Rather, you grow your account 1% over a course of a few months. That's a higher percentage of growth than 10% in a day. I'd rather go up a ladder that has each step a foot apart than a ladder that has each step 10 feet apart. Yeah, you're going to hit that target quicker, but boy, it's going to suck if you fall. And it's going to be harder to get there because you're going to have a lot of struggles getting to that next step. Where you take tiny little steps, you're going to get there. It may take a little longer. That's okay. Everyone's on their own journey. Like, some people take a longer journey than others. Like, and that's okay. You know? I don't want overnight success. I don't want to be that lucky story. That's like winning the lottery. You ain't going to appreciate it. You're going to waste the money. You ain't going to use it properly. You ain't going to learn. I'd rather have those struggles that grow my character, that grow my trading strategy, that make me better each and every day. I want the struggle. Like, because that's going to make me better off in the long run. Nothing easy in life is long lasting, and nothing long lasting in life is easy. This is something that's not easy, but it's going to be long lasting. It's something that once you know this, no one can take it from you. Just like a job, someone can replace you, but no one can take this kind of job away from you. Only you can take it away from yourself. So, legal Riz, let's see what you said. Okay. Going back to your fib conversation, I use 5 to 10 minute orb fib, and notice if candles are getting closed above 0.75, 0.85, and I'll go long on retest. Mostly you will notice it always knocks down high range of first 5 or 10 minutes orb. Is there a question in this, Riz, or are you just sharing that?
No, it's not a question. It's just
Okay.
adding to your point when you were mentioning about fibs and all that. 50% range in the VIX. So I was just mentioning my method, what I do. I mean, first 10 minutes, I let market to flush out and readjust what they are trying to do, whether
Yeah.
they want to go long or short. So actually posting this fib is just to show what I look for. Mainly when we are going long, I mean, market want to go long. Most of the time, bulls, they defend those candles, and they try to keep it above 85 to 786 fib levels. So that way I know where the market gonna go in 10 minutes. I know when the market comes down on
Yeah.
mostly a 45-minute candle. So I go for long.
Hmm.
It gives me easy 40 points, 20 points. Remember, I've been saying 20 points. If you enter with three mini contracts, even 20 points are 1,200 pound, I'm saying dollars. So I mean, 20 points are enough. And why I was saying, most of the time those 5 minutes candles high ranges, or if it is going short, they get knocked down by 45 minutes candle or 50 minutes candle. So that way you
Yeah.
know short shots, where the market gonna go. And the second thing is that if you notice fib, if the market want to go long, it will try to hit almost, uh, you know, uh, in between standard deviation 1, and then move down, or it may take a slightly continuation. So most of the time I draw candles based on 5 minutes, 5 minutes candles. Some people go for 15 minutes, but I take entry on first 5 minutes ones. So yeah, I can catch 20 points, which is more than enough, honestly. Yeah.
Hmm.
If you see, there is also a drop started around, I think, 10:30. Most of the time, 10:30 start happening reversal or continuation. These are the signs. So when it goes down, it's going to go to 1.5 fib level, 1.5, 1.6. So it could be upper ranges, it could be south downturn ranges. So you got to keep eye and keep that fib. If you find difficulty identifying order blocks or identifying fair value gaps, that's what I do. This is the most easiest thing for me to do. But anyway, yeah,
Yeah.
just wanted to add points, and that basically highlight what you were mentioning earlier in this session. So yeah, thanks.
I love that you say bulls and the bulls and bears. uh, so
just to make it
yeah,
just to make it easier to understand why I'm highlighting
yeah.
fib level 786 or 85, so people can understand, okay, they are defending that area, so they want to go long. So yeah, I mean,
Mm.
most of the time those candles get closed above golden pocket or a point 0.5 ranges.
I
So
love the
yeah,
golden pocket.
yeah, golden pocket as yeah. Anyway, I know you are using
The golden
ICT
pocket's a.
concepts.
Oh no, no, I still use golden pocket. Don't take that away from me. Look at that. I got the fib right there. I love the golden pocket. It's a good thing to use. Um, it's just
Why I
I don't
use
use it as
these
much.
yeah, Chris, why I use these fibs, I think I already mentioned that. Some of my friends, even my son, is also learning quant programming, quant computing stuff of all these algos. So all these algos, they are based on fib levels. So that
Hmm.
is the reason. I know we talk
Yeah.
about liquidity sweeps, we talk about order flows, but end of the day, all these algos, they are running on fib.
Oh, no, no, no. Yeah, it's all an algorithm. Market's got to go higher for it to go lower. It's got to go lower for it to go higher. Like, I agree with you. It runs on fibs. I mean, like, if I were to, let's see. I don't know if I had to. Wait, wrong screen. I have too many screens. I have 4 of them. Like, look at this fib, and then look how it uses them so beautifully well. You can start here. Market closed right above it. You can see how it tapped into this one, how it tapped off this one, broke through this one, and initially struggled to get through here, got through, barely tapped off the red one right there. We came back down and initially tapped off this one, stayed above, came back up, came down, closed above this fib, got back below this fib, below this one, tapped off this one, come up, close on this one, tapped off this one, struggled to get back through it, tapped off. I mean, I love it. Fibs are great to trade with. Nothing wrong with that at all. I love fibs, but it's just my personal opinion. I don't use them as much because I like to just call a liquidity zone that I want the market to go to, and then I just trade that. And my times are the opening range gap, the 945, and the 10. If I can't catch something by those 3 opportunities, then I'm just gonna call it a day there. You know, and the market will usually present an opportunity before 10 a.m. You just gotta make sure you get it. But we don't want to sit on the computer all day, so I understand us feeling like, and it's human nature and it's psychology. We feel like we're missing out if we're not watching the market, or we have these goals or these plans to make $300, $500 a day, whatever it may be, and we haven't hit that goal, then we feel like we need to be on here until we do. But the thing is if you limit your trade time to specific times, because that's what ICT is. It's all about time. You got Silver Bullet, you got Turtle Soup, you got the Unicorn model, you got kill zone times, you got it's all time. And if you limit yourself to those time periods and you don't force a trade just because you have a goal set for the day, it's okay if you don't hit your goal that day. There's nothing wrong with it. At least you still have that account. At least you're still up. You're not down. You haven't lost money. So wait for the market to show a better presentation. The most successful traders trade 2 to 3 times a week. You know, when I started developing that mindset, I started trade to take in better setups, and I started seeing more success. And it's okay, like you guys don't have to go for the big move. The big moves come with time. Grow your account. Focus on that, you know? You can sit here and you see we came down, we swept this. The market stayed. Where did it stay in? That's a 1 minute. Let's look at the 15. What time period is this? 10:59, Thursday, the 18th. Did I say 10:39? Yeah. So you have this inversion right here. Go back to the 1 minute. And I mean, even if you don't use that, you could use, I think you could use this one. Does it? What's this one look like? I was crazy about those. So we're gonna run with that. This is a 5 minute bullish inversion. So you have that drawn up, right? You can use other time frames. Remember, 15 minute or 5 minute. Draw out those areas. Wait for the market to play back into them. Drop down to the 1 minute. Find your entrance. But it comes back into this and starts tapping off on these candles. And okay, so we took sell side here. Now the market's respecting this area. Drop down to the 1 minute. You enter somewhere around here if you want to. You could wait for a little bit more confirmation as well if you needed to. You could wait for an inversion. It inverted here. It inverted here. You could also use this order block, this bearish order block right here. Tapped off 50% of it. What do you do from there? Let's say you entered at 24,753. And what do you do from there? Just target the nearest high. It's $825 right there. And your risk is 80 bucks. If you had gotten in down here, your risk would have been slightly higher, 310, but that's $1,200 instead, you know? You don't got to go for the big fish. We can go for the small ones. I mean, even if you wanted to, you could just target this one. And run with that. And then another thing you could do is if you didn't want to put your, wrong one. If you didn't want to put your stop loss all the way down there, since that's a little bit of a bigger fair value gap, you can draw this right here. And typically, what I'm always going to recommend people do, put it to 75%. That's $215 loss with an $830 reward. And that's only just to the that first little, that small little high right there. But if you wanted like the last final high really before the true drop, then you could go for that. It's 1290 versus 215. And if you did it on a mini, that's $21.50 versus $129. So that's still great. You know? I think that's correct. Yeah, that should be.
You know, Chris, your 50% entry, I have tested many times. This is perfect entry. I mean, I try to adjust on different levels, but 50% entry, I would say that hits 90%. 90% you can get entry. If you just put your limit order on fib level 50, it will be collected. But a stop loss, most of the time, if you are, I usually put 20 points stop loss. So I know it's quite wide, but I know it's going to go up because the entry is very solid. And that's what I believe. And once the entry is in, my limit order is picked up, I immediately do break even. So I know because it could be a flush down in next candle, or it could be a very fast uptrend move. So I try to bring break even very quickly. Yeah.
I mean, even if you didn't want to You could set your profit target. You could just trade here to right here. That's a small little scalp. 730 to 760.
Yeah,
And the
yeah,
reason I
sure.
say right there is because you got a proportion block right here. And you see we had a
Yeah.
little bit of some problems when we got in it. So
15 to
typically if
20
I'm
points are
targeting,
easy. Very easy.
yeah,
15 to 20
and
points.
I mean you could create you could create a model just off of that. Like that's the thing I tell people as well. You don't have to go for major moves, you know? And that could, and if you get good enough at it, you can stack up your contracts and just target 20 points, even 10 points. Like that's the crazy part. Like you can do something like, okay, we swept the high. What do we do? What do we think's next going to happen? Draw out the fib. Fib touched off 50% on the very next candle. Okay, cool. Let's see what happens next. Let's take some more sell side. Let it take sell side. What does the market do? It comes down. We take sell side. We come back up, and it tapped into this inversion right here. We came back up, and we there's nothing there really that it played into. Well, I take that back. You could draw, so you could draw that up, draw this up. Look at that. A little volume imbalance. And you could create a simple model to where you draw that up, see how the market responds to the wick, and then you take a fair value gap and a fair value gap, which you could do like whoops, right here. Because what you do, we took a high, came down, came back up, made a smaller high. Okay, that's a sign that the market may be reversing, right? Draw out a fair value gap, wait for it to come back into it. You can limit sell. You can set your stop loss right outside of it. Or you can set it inside of it at the 50%. If it's closing outside of it, it's going to typically have a pretty solid setup. And then you set your take profit right here. And then look at this. You do 6 contracts. If you're normally risking $300, that's $350 to $1,500. Perfect, you know? And I mean, even if you didn't want to do 50%, you could do the 75% like I've shown y'all. Set it at 50% or 75%. I mean, it's a 1 to 3. As long as you're okay with the $500 risk, that's still solid, you know? If not, you could do 300, still make $930, literally almost $1,000 right there. And those are minis. And all it's doing